Hello all, welcome to my channel. My name is Mrs. Prajakta Bapat. In this video, we are going to discuss profit volume ratio and break-even point. So let us understand first what is profit volume ratio, normally known as PV ratio or contribution ratio. So this is the first formula. Now in the previous video, we have discussed how to prepare marginal cost statement. Now, in this video, this is the main concept which we are going to learn or which is always useful in calculation. So, we will be discussing that concept, that is PV ratio. So, what is, first of all, let us understand what is PV ratio and then we will learn the formula. So PV ratio is basically I want to know that if my sales is 100, then what is the contribution out of that. Now we have seen in the previous statement that sales minus variable cost you get contribution. So sales has two parts in it. First is variable cost and another one is contribution. So if I want to find out that how much is my contribution out of sales, we calculate PV ratio. So it shows the proportion of contribution of from the sales. So if my contribution is 20% out of the sales, that means your PV ratio is 20%. So your contribution out of sales is 20%. So what is remaining now? Variable cost is remaining. It has 80% proportion. That is how it is calculated. So let us learn the formula. PV ratio is equal to contribution upon sales into 100. So contribution you will be calculating by preparing a statement and sales will be given to you in the question. And as we want answer in the percentage form, we are multiplying it by 100. So contribution upon sales into 100. That is your PV ratio. Now, there is another formula which is given. Normally, like 80% of the questions will be using the first formula. Now, let us understand what is the second formula of PV ratio and when it is to be used. So, let us read the formula. Difference in profit upon difference in sales. So when we say difference or change, what do we understand by that? Change meaning there has to be two amounts given, right? So difference in profit or difference in sales meaning there are two values given in one question itself. So this is the situation where in the question they will be giving you the information about two time periods. So it may be 2 years, 2 months, 2 quarters, etc. So information of two periods will be given. Then only second formula can be used because then only we'll be able to see the difference. Then only we'll be able to calculate the change. So change in profit, that is difference in profit upon difference in sales. So for example, if there is an information given about 2 years, 2020 and 2021. So what is the difference in profit? Earlier your profit was 2 lakh. Now it has become 3 lakh. So difference is 1 lakh. So your numerator will be 1 lakh. Same way difference in sales. This will tell you the PV ratio. Again, we have to multiply it by 100. It is understood because you want answer in percentage format. So, this is the another way where we calculate the PV ratio, but it is related to a specific situation. So, this is a concept of PV ratio. Now let us understand the concept of break-even point and let us understand how to calculate it also. Now normally it is known as BP. Now what is break-even point? Break-even point meaning any business in normally in a newly formed business, it is our aim to at least recover all the costs which we have incurred during the process, right? Obviously every business is carried out for a profit purpose itself, but normally initially at least we have that aim that I want to recover all the costs which we have incurred, then we can think about the profit. So break even point is such point where you don't get profit and you don't have a loss also, meaning your costs are exactly matching to your turnover, exactly matching to your sales. So you have incurred till now 1 lakh rupees, you are earning 1 lakh only. That means no profit, no loss. Okay, this is the concept of break even. Now, how to calculate it? So, break even point can be calculated in rupees or it can be calculated in units also. So, let us understand first how to calculate in rupees. So, it is equal to rupees also, or it is called as value. So, it is equal to fixed cost upon PV ratio. Fixed cost meaning cost which is fixed, which will be given to you in the question. upon PV ratio. PV ratio is profit volume ratio, which is again you will be calculating. So fixed cost upon PV ratio, you will get the answer in rupees, that how much is my break-even point for my business. Now, if you want to calculate the same thing in units, you want to express it in units. Okay, for example, after selling 500 units, I have a break-even point. Okay, so how to calculate it? Fixed cost upon contribution per unit. Fixed cost meaning, fixed cost will be given to you in the question. Contribution per unit meaning, a sale minus variable cost, you get contribution. So per unit contribution would be considered over here. That is CPU. You get the break even point in units. So you can express break even either in rupees or either in units. So this video we have discussed about the PV ratio and break even point. In the next video we will be discussing two more concepts related to marginal costing. Thank you.